Hello everyone. How's everyone doing? I hope everyone has had a good morning. And today we're going to be tape reading some pre-FOMC price action. I wanted to start the stream a little bit late because I wanted it to not be so long towards the FOMC, as if I had started it at maybe 9:30, we would have been here for ages, and nobody wants to stick around for that long. So I thought, okay, let's do it at 11:30, and it worked out well. So the first thing I want to go over right now is the buy side level that we had marked on from yesterday as the high that was stopping at a rejection block, and we failed to fill in the fourth quadrant of this new day opening gap, which is the difference between Wednesday's settlement opening price and Tuesday's closing price. You can see we fulfilled that objective with today's price action, with this large wick here delivering us towards the buy side and towards this fourth quadrant. London high of yesterday, which was unbreached, is a nested high. So if you want to trade into this quadrant, then we would have to take out the high there. And I want to take your attention to the 4-hour time frame. This is just something that I've noticed. It's not significant, but it's good to note. Notice how the bodies have been respecting the consequent encroachment of this wick right here. And if you look at it in the larger scope of things, you can notice this wick here as well. Also, the bodies respecting the the discount of the premium of that wick as well. And there was quite a big S&T within these two lows here, because initially what I have liked to see is this low here being taken. Give us kind of that breaker framework towards delivering to this high, but price did not have the fuel to deliver that today. So while keeping that wick in mind, notice the reaction that we had off of it at 6 a.m., which gave us this big displacing candle. And you can see that overnight was a run lower into the wick here. And then once 6 a.m. opened, we completely cannibalized everyone that was winning during London. And you can ask yourself, who were the winners during London? And obviously you can tell that it was the sellers. And off of that, what we had here is the reaction off of this gap. It's clear on the 15th. So notice the first mitigation of the 1-hour gap that is highlighted at this low, which happened at approximately 8 a.m. We moved away from it, consolidated a little bit, and then we had that big drop lower. Also note, we are in full respect to this gap, really telling us what the order flow is trying to do. We had full respect to this gap within this. You see how the bodies completely respect, even though it does reach down into it, and it's not technically narrow fed. It's still a bullish gap that's being respected. With this wick here, this big drop down lower, takes the low of this gap here, as well as the low of this gap here. And then we start to push higher, and you can see that we deliver to the second quadrant, then push back lower, refer to this push down lower here as an order block. I want to note that actually. Discounted order block at the right, and then we use that order block to deliver higher. So drop down onto the 5-minute time frame. Notice these two wicks stabbing into it. Drop down 1 minute and get a more refined structure. So off of the structure here, what you can have is you can draw out whatever your dealing range premium and discount, which is from this high to this low, right there, right there, and you can highlight this high here as engineered buy side, and these relatively equal highs as buy side also, and these also relatively as buy side. Now, what I would have liked to see here within these lows is this low here to be swept and give us that same premise of a breaker from toward then to deliver us higher using the system version. And I'm live streaming this after ICT has posted this trade, and I very much understand the framework behind the trade, but I don't understand the logic behind it too much. What I would like to see is this low be swept and this close not be like this, maybe a better fill, not this high into price action, because at this point we're very much into a premium and we're further towards, I mean, we're higher than yesterday's buy side level. So entries above this level here were not the greatest, and it's definitely not something that I would take, but it's something worth considering. So ICT's long was on this candle here, and I know as I just said, the framework is very much there. It's available to my eye, but the entry is, it's I don't understand it, and I will look into it. But it's definitely interesting to see how he can enter positions like that, not meeting certain criteria that I would have liked to see met. But I would want to believe that it's because of my infancy in this and his profession compared to my profession, if that makes sense. Anyway, after we had that move from the discount order block, we can see after we push into the newly opening gap fourth quadrant, we seem to find resistance at some level, which I'm having some trouble figuring out. But it seems that we stopped out around this volume imbalance here, but I don't see the logic behind it because it's a very hindsight volume imbalance, and I would have not anticipated this if it didn't reverse there. So let's drop back onto 15 minutes. We're referring back to the opening range gap. Notice how the bodies are in full respect of it, but the wicks travel outside of the range, and how we go back and refer to the low that was created inside of this gap here. So it's more clear on the video now. So you see this first low here that was swept a second time, a first time, was referred to the future, which was around 10:45, just about an hour ago from starting the slide. We go back lower and we sweep that low a third time, which obviously, it's acceptable that we do that, and just to the point where we respect bearish arrays. So, after we have this third sweep, it brings me back to an example that happened yesterday, actually. Yesterday we had that third sweep of the final low, which I think I can pull it. So, yeah, here. So, we were traveling around this range in price action, and we had just swept this low here, which was a second sweep of this low right here into a 4-hour volume imbalance. So my criteria for this low to be taken as a sweep, which was within this wick here, was that we inverse this gap here. But notice what happens. We treat the gap as the IO Fed, and if my final hope for bullish price action was within this gap here, and once we saw the inverse, you could pretty much almost guarantee this low here being taken. Why? Because we have this nested high here. That's a high, low, high, high, and you can anticipate a lower low, and that close on there would have been nice to take an entry on, but it's against my bias, and I would not want to participate in something that would be against my bias, so I just stayed out of it. But yeah, referring back to what's happening right now, that third sweep, when it happened, you can always refer to see how price reacts around the raise to tell you whether this will be a sweep or not. And you can see that once we had that sweep, we started inversing this array here. We started to respect this order block and we had a push higher, stopping at the opening gap again, failing to reach the lower quadrant, and just stopping at the first quadrant of the low. And what I was looking at right now is that we had this previous mitigation range with this wick here. And I noticed that price was kind of hesitant to move off of to push through the consequent encroachment level of the wick. But as you can see in time now, price has dug through it. And I'm not sure if this is hinting at a switch in order flow or if this is just bad price action and engineering sell-side liquidity. Buy-side liquidity until we have FOMC, and FOMC can give us that big move higher and see further prices. So I want to delete this buy-side liquidity, and I remove this mitigation block there because that's just way too much drawings for my liking. I'll take off the wick as well. And wait a second, screen freeze did. Yeah, okay, so what were we saying? Yeah, we were talking about how price is failing to move higher, and it seems that price is, accumulating buy side for FOMC, and that will give us the move higher. But for now, what I'm looking at is what I had in mind is that we have this previous push lower here, which I believe is right now getting mitigated, and you can see with this push move, with this push higher, within this totally efficient price range, we just inversed the gap between um, price action currently and all of this buy side. And I actually want to draw on the current negating range, which is from this side of the slope, and you can see we also have that second sweep. And it's also back into that opening range. And as we inverse this gap here, we're starting to push back lower side of it. And price could refer back to this order block, which it is right now. Drop it on, which it is a premium order block, but whatever. I want to see price is looking to immediately balance this gap here, or it might leave that small gap here. But in both cases, that would be fine. So this gives us a condition right now. I want to go on the 2-minute time frame and notice what's happening. 3-minute, 1 minute maybe. Okay, nothing. Okay, we can stay on to the 1 minute. So we're trading within this gap right here. If we engulf this whole push lower and use it as an order block later on, then you can pretty much consider this sell side. This buy side here. But what price is looking like right now is that it's gonna be pushing to that gap, and you can always have that unexpected push higher, and that gap is respected. But if we do reach into this low here, then that would be off the table, and yeah. Let me extend this to the right. So price just inverse that. We have a rejection block at this low. Price could be going down for the third sweep, but then it's always like the same example that we just went over right now. If it does go for the third sweep, then you would have to measure a array that would determine this either being a sweep on liquidity or the market shift lower. And with what price is doing right now, I do not want to participate in anything because this is just very ugly price action. And yeah, but buy side he does look promising. There's lots of resistance. That second sweep on this low is also nice, but I want to check for what the YM is doing because that would be our biggest telltale sign to whether we want to see price trading or not. So yeah, notice within this big push low, big push higher here, you can see that the YM wasn't really interested in doing anything. And while the Nasdaq was pumping, the Dow was failing to follow. So that's another sign that you don't want to be trading in these conditions. Take a look on AMD. Had something going on. Futures aren't looking, the bond futures aren't looking like they're going in my direction. Aiming for the sunset, but could also go back higher from a sweep on that high. I'll allow it to do that, but anything after that, I think my outlook would be, this was a very rushed outlook. Not too proud of it. I want to see what's going on. And check the daily time frame. Oh, yes, today was a no day. Today has been slightly trading higher. Let's go back onto the Nasdaq. So again, we just took out that low. I want to take off these drawings. I don't want my chart to be so full of everything. So, and again, the same premise is happening as the last push higher here. We had that big displacement, and then we failed to deliver anyway. We stopped at this volume imbalance, and notice price also stopped at the low of the volume imbalance again. So that's something you want to watch for. Finding lots of resistance at this bearish volume imbalance, telling you that order flow is going to be bearish for the time being. But notice how it's pushing through the 1 hour gap that we have here. You can see it might want to perform a second stage, final stage delivery on the market maker sell model here towards the slow. But there's nothing prominent telling me that this wants to happen other than this delivery here. And some notes and draw. I want to measure equilibrium on this leg read. No, that doesn't seem. Oh, it does. It is actually. The slight tap into equilibrium on the range. See, we have a second run there, and then we start to trend low. If I was a seller here, I'd be very cautious with my position, noticing all the buy side being engineered because I'd also be buy side. But yeah, as we inverse that final gap between the market maker low and current price, let's see if price wants to deliver to that low here. I wanna zoom out a little bit and notice if it anything. I'll draw out this gap here. Draw it all the way. Price could want to refer to this small gap here. Whether it does or not is very much irrelevant. It's just something I don't know in price. I'm not going to be actually aiming for this. So we're basically 3 hours away from FOMC. Or sorry, 2 hours, basically. So after inversing that gap, we're seeming that we want to trade back into it, and there we go. You get that trade back into it. And you want to know this small gap open here, so there are little pockets of inefficiency in this here and this here. See, we're overlapping this gap here. to the 5 minute. I'm gonna draw a wick here actually. So, that's it. And I wanna. This is my drawings for the wicks are very ugly. Fix this up. Red and this put this on the left hand side and mid it. And I wanna. How does that look? Okay, that's way better. Okay, so notice the full rejection of the discount of the premium of first of all this wick here, and also we're back within that hourly gap. I don't know which happened there. I was clicking before I heard it, but yeah, notice we're back in that gap, and we're very much consolidating within that gap, which is something that I don't want to see. I would, if I was bullish, I would like to see a big run higher, taking all those entries on the sell side. But you know, with the reaction of this volume bands there, it's not telling me that we wanna see higher prices for now. Also, with the respect of this wick, telling me much. I wanna draw out actually this small mitigation range here. Price could use this gap here to deliver towards equilibrium in the range. Want to see how price goes within this gap. The only thing that's making me doubt this gap here is this volume bands created. You know, you notice that with every volume bands created, the price action following is very displacing towards the direction the other side. But there's always you know, the position where you can trade back higher and remain within the bounds of the gap. So we're always watching for what price wants to do. Equilibrium mark right there. Okay, so price has repaired this gap within here. Draw this on. It's important to annotate your charts to the way where you're able to see what's happening. So notice once we repair that gap, we trade to the tick inside of it. We have that big push lower. Again, you know, with order flow how it's looking right now, it's not looking like it wants to be very bullish, especially with the signatures that we are seeing right now. It's definitely not the best. But delivery towards this low gives us another sweep within that. And I feel like we're, you know, it's about time where we get a short fire because we're using this gap way too much. We used it once, man, at Judah swing, once at 8 a.m., once at 10, 11 a.m. almost, and now at 12. Not the most favorable thing, but I want to see how price refers back to this reaper here gap again. We'll see how price, if it does trade back into it, what does it do there? Or again, you know, the trade back into the inversion that we had highlighted. The final gap between the low of the market maker model and current price traded back into. I want to highlight it actually. So significant speed off in the one. Velocity. So trade back into the inversion. We failed to reach a discount. Premium, sorry, and then we have that drop lower, taking out the low again. We're still resilient at this low here, so you see prices drawing back into that Reaper gap, and I want to see how price fits within it. If it inverses it, it's almost guaranteed that we see this high here. But yeah, so this gap here is also a breaker. I mean, not breaker. It's a breakaway gap, and price meeting it right now. What does that tell me? It tells me that price has met that objective, and it's now reaching into a breakaway gap as a drawn liquidity after that objective has been met. And of course, whether we respect it or we inverse it, it's always up for debate. But that isn't the most important part. So I also want to know this this gap here. I mean, sorry, not gap. This candle here. We are engulfing it pretty much, and I want to see if we close below the body opening, sorry, of it. And that would tell me if we're having a change in state of delivery or not. Okay, so we have that close after the retracing to the Reaper, and price seems like it's going to be heading towards this small gap here. I want to draw on the consequence encroachment of this candle here. It's a little bit too steep, but the hourly with that gap is not looking too good. Might use that price. This would have not been a bad short, but again, it's against my bias. Aim for that gap to be filled right there. Tell you what, if we go back and have to order block again, I think I'll try a short. So there, that gets fully filled. We don't get an entry into it. That's okay. I'm not too bothered by that. So we seem to be dumping pretty heavily right now, taking out most of overnight slows. I want to see. Oh, sorry, I want to see how it reacts to this 1 hour gap here again. Or maybe if it wants to reach toward this low, and that would be a viable option. Hop onto the 4-hour. We could go down there and buy the EST. I'm gonna remove it off. It's always gonna be there as a mental note. Some drawings here. 1 minute. Check out what's happening. Check this down. There's a smaller gap within there. It's filled. Zoom in and fix that up. So, okay, so it drew to that pretty violently, and we're back into Skype here. I'm gonna comment on some of my mental notes. I'm kind of bummed out that I did not take an entry on this register order block, but you know, it gave me 2 chances to enter. It gave me a chance to re-enter on this inversion. It gave me a chance to enter this Reaper, a chance to enter on this order block. And I'm kind of bummed out that I did not take an entry. But it's important to recognize that it's opposing to my weekly draw on liquidity. And I guess you could argue that you do not need a weekly draw for a 15-minute or 5-minute or 1-minute move. But I want to say that to myself as a mental note, it's okay. There will be another trade. Now, focus on not forcing another trade and focus on doing what you did and the next time executing. Don't dwell on this missed win because it might as well also have been a missed loss in another scenario. It's important to note that, you know, remember this was against your bias. Don't be so bummed out that it was a missed win, because always take into account the scenario where it could have been a missed loss. I mean, or a taken loss, sorry. So we're back into that gap that we had filled. Price overlaps it one more time, trades back into that, and then I want to see. I don't want to force anything here, so I'm saying that to myself so I don't do anything stupid. But notice this small negation block here. You can take it to where it lines up with this inefficiency, and see now we're getting that second sweep on this high here. I don't want to see a market shift through that, so basically I don't want to see this gap here be inversed, and I would like to see it stay either filled or a portion of it not be filled. 3-minute gap right now, so 4-minute. So 4-minute is the biggest gap. That lies exactly within a premium. You see, we're kind of shifting through the high and changing in the state of delivery by leaving this down close candle here and fully engulfing it. So, the best thing that you can see in these terms, price action. But we're also, keep in mind, we're also within this gap. So let's not rush anything. Just keep watching. I wanna actually draw on the forming gap here so I can keep it in mind. I can kind of have the parameter between where it lies and where it stops. You see, it overshoots the time close candle here just by a decent amount. So us disrespecting this gap here can also be a high time frame narrative of respect to a high time frame forming gap. I noticed there's a viewer here. If you want to type something in the chat, how's your day going? How have you been? You've been here since the start, basically. Who are you and what brings you to my chat? And why are you staying on for so long when there's so many other creators that you can be watching? Well, it's you. What's up, man? How are you doing? So we're just starting to shoot up higher through that forming gap. Won't be too surprised if we do close through it. In that case, it would confirm this here as a market shift. And this tells me that price has the objective and it's ready. And it's telling me that, okay, we're going to be seeing the opposite side of the market for now. So this as a disconnected bullish forward block. Take off that gap. You see it's starting to push through that order block that we once respected. And I want to see how we react within this reaper gap here. Not bad, just take that stream. Well, feel free to stay as long as you want, man. Not much happening, not much that I wanna be partaking in, but I think you were here when I was mentioning this short position here, which I kind of had a little bit fear, um, and I did not enter on this order block here, and I knew that we're gonna most likely deliver to this low, and then fill a gap is here, and I didn't, enter on it. And then once we start seeing this small wick here, I was saying, okay, you know what, I'll enter on maybe the second tap back into this order block. And that didn't happen and just shot down without. So I'm not gonna lie to myself. I am emotionally bummed out, but I want to keep this aside and I want to continue on and see what price has to offer. I'm not gonna be on every single move that I'm gonna be watching or looking to partake in, and that's fine. I'm not expecting to, but I feel like I don't want to say I feel like I made a mistake, but I feel like I did something that I should. No. I feel like I did not do something that I should have done, which is basically the short. And I think for a bit, I think you're here. I was saying to myself that that also might as well could have been a loss. And I think that's me trying to be comfortable with the fact that I missed that shorting position and try to, I think it's a little bit of cope, honestly, because if I stay with that mindset, then every single trade that I don't take and wins, I'll assume that to be a losing position in another hypothetical scenario. So yeah, I just want to put that aside, put my emotions aside, put my pride aside, put my feelings of regret, my feelings of FOMO, put my feelings of greed or jealousy aside, and just keep watching price action. So I want to know that we are currently accumulating between the order block, and I think we reached into the consequent encroachment of it. I'm pretty sure. No, we failed to, but I think we moved into the consequent of the body. Yep. So we moved into the body consequent of the order block, and we saw it drop lower, and we met this small gap here, and we started accumulating for a bit, and it seems like price wants to have a breakthrough now, leaving below equal lows here. But basically, what I'm trying to get at is how price would react within this reaper gap. And after that, I want to see during and after the Jackson Symposium and FOMC minutes, there will be more opportunity. What's the Jackson Symposium? I heard Ashi talking about it in his last stream, but I'm not sure what that is. Search that up. What is that? Jackson Symposium. Something to do with the Fed, but I'm not sure what it's in. I heard ICT talking about how within the Jackson Symposium time, price ranges are likely to align that each other would like overlap themselves. So look at the description of Forex Factory. Oh, I did not notice that actually. I didn't know it was there. Jackson Symposium. Um, there is there is none on Wednesday, but I think that maybe they apply to the entire week, like NFP week. The Economic Policy Symposium held in Jackson Hole, Wyoming, is attended by central bankers, finance ministers, academics, and financial market participants from around the world. The venues are closed to the press, but officials usually talk with reporters throughout the day. Comments and speeches from central bankers, and other influential officials can create significant market volatility. So it's kind of like a meeting. I think that's where I'm getting at. Yeah, thank you, Nico. Yeah, I assumed so. Yeah, it would explain uh, this week's very volatile price action. So you can see that back-to-back days we've had large ranging days. So we're starting to break out of that accumulation range just now, making another change to the delivery, and we're back with that Reaper gap. And the one thing that would confirm a bullish standpoint is closing above this intermediate term high here, which was the Reaper, and it might find resistance off of this volume imbalance here, but I'm not too worried about that because I'm assuming that if we do close above this intermediate term high, we'd also end up disrespecting this volume imbalance. But we started to trade back into that inversion that had priced just a couple of minutes ago. ICT recommends taking out orders immediately after a new high or low if you're in a position. ICT recommends taking off orders immediately after a new high or low if you're in a position. So are you saying that if you're in a trade and price starts to make a swing high or low, you're take off orders? I don't get the logic of it, but if ICT claims that's the best thing to do, then I guess that's the best thing to do. Yes, during Jackson for the chop. Oh, okay. So that only applies to the Jackson Symposium meeting. Okay. I'll definitely take note of that. Actually, I'm gonna write down in my notebook that very thing you just said right now. Thank you for the comment. Write this down. And also, Nico, if you don't mind, could you drop down in the chat a link to the video where he said this from ICT? So we traded back into the previous dealing range discount, which I had highlighted before, and the one that we failed to trade into when we stopped at this high here. So I want to draw that back on. So there's that range here. Trade back into discount there, and I want to see what price wants to do at that level there. So it's around this small gap here. This gap here should not be traded towards. And I want to see this run lower here being engulfed quickly, kind of following a perspective of accumulation, expansion, accumulation, expansion. I want to see that happening, and I want to see this low resistance here get run, possibly near the. Okay, so kind of just open right now, and you can see I like how it opened with a volume imbalance, so that makes it might to move higher, but just be watching to see what happens. Break equal highs with this level here. Let's see how that goes. If the close is overlapping the volume imbalance, and so then that's gone now. I might want to see price trade a bit lower, create a fair value gap, and then inverse that and take it out the equal highs. But again, these highs are within this premium gap of the previous range. So I would say that we're in a premium right now. And actually, no, I wouldn't say we're in a premium. I would say we're in a very deep discount actually compared to daily range. And I just realized I don't have my bid not open price drop off. So where's the it's the midnight is right around like that. That's there. Okay. So notice the failure to trade towards this gap here, even though there is a volume imbalance within there. We kind of had that small up candle there. And also we just traded within a volume imbalance. Failing to mitigate it, making equal highs with this body here that would dictate the volume imbalance open and close, mean high and low. So yeah, I'm just kind of watching right now on the sidelines, not looking to do much. Note this price run as well here. Notice how the body is respected. This order block. Failure to close above it every single time. See the wicks doing the damage, and this candle here closing exactly at the order block low. So that's something you want to screenshot and take note of. But for now, it's just currently accumulating towards the higher um, point or section of this range here. So I wouldn't be too surprised if price wants to close through the order block. But it's nice to see how these arrays work and how the respect of it is very significant and very precise. So again, it's candle here, fades to close below it. Have a volume imbalance opening right there. We're just placing pretty heavily through the high that dug into the volume imbalance. I want to see if price wants to retreat from that high quickly, and if it's just a big wick, or if it wants to close above that high and dig into this gap here. And I want to see how price tracks within this gap. So we see we close through the order block, and we have that accumulation expansion. So I want to see if price wants to go back and retrace it just like that into this volume imbalance and also into this previous accumulation range. And I want to see what price wants to do around that range there. So that drop was really quickly. That was like let me measure that actually. It was like around this level here. It dropped in 1 second. 9 points, 9.25 points in 1 second. I'm very interested to see how price closes within this volume imbalance. So we see we inverse it. Price may be looking to do something like accumulation, manipulation, and distribution. The array between expansion and distribution was this volume imbalance here. As we inverse that now, I'm anticipating a distribution. And you see we just fall short of the gap here, and we inverse another volume imbalance by I think 4 minutes. We're staying in respectance towards this gap here. 3 minutes, we're still within this gap. 2 minutes also within a gap. 1 minute just accumulating, not doing much. So this is a big sign just to stay away. There's nothing clear right now, and see how the Dow is moving in accordance to the Nasdaq, completely opposite. So it's important to recognize these type of conditions and to admit to yourself when is the time to trade and when is the time to stay away. And now is the time to stay away and just to watch. So another thing, oh, I'm sorry about that. But another thing that I want to note is that how we are inversing arrays here and here, and we're failing to deliver from them. That's another sign that we want to keep in mind when and looking at bad price action and how to differ between them. So there we're getting the big push higher, just tapping into that gap here. Still did not trade towards this gap here. So whether price wants to push through this gap or not would tell me whether or not that they push through this high here was a market shift or not. So um, with the chop and with this delivery lower and that big like resistance at that level, it tells me that we might inverse it. And on the other hand, um, this could just be an retracement to then move back lower into the previous range equilibrium. This array especially, because it's the most premium array within this um, price range, mitigation range, whatever you want to call it. So yeah, just want to be watching how it moves. I want to note another order block here. I want to take out this one. Change these two pluses. See how price see if he wants to engulf this entire down close candle. And that would basically tell me that okay, we're going to inverse this gap here. Don't expect to hold, and we can then start pushing towards the buy side. FOMC minutes are in around an hour 30. So I'll be getting off when there's an hour left for FOMC. So around 1 p.m. So this close is not the best, but it is to the body, and we are still holding super block. So there is still hope that we do close through the entire body here. Through here. And through this gap here, but you also want to note a inversion, volume imbalance here, volume imbalance here, this big gap there. Trading back into the order block, pushing lower into this volume imbalance here. I'm going to be honest, I did not want to see that. I wanted just to see pushing higher and higher and higher, and also look how opposed the YM and the Nasdaq is moving. So hands off, sit on your hands, whatever you have to do to not trade these conditions, and just watch. Notice the respect of this volume imbalance here, sharp to push higher. I want to measure out the consequent encroachment of the order block that we just looked into. So notice how we respect the order block CE. I want to shift the attention towards it. As we're going there, push it a little bit higher. Just a very approximate level. I'll actually make it exact. Just pissing me off. That's not exact. Oh wait, did I get it exact? I did. Huh. Estimated the exact midpoint of the order block. I'm very tired. I'm gonna go to bed, even though it's really early. Did the ICT mention why he is not going live today? Check up on maybe maybe you got kidnapped by the market again. It's not live. Oh, he did mention that he's not doing live stream today. So bummer. I'm gonna draw on this volume imbalance here and how price seems to be holding it pretty sufficiently. And I wanna notice how the Dow is moving compared to the Nasdaq. I'll go back to this time where I missed that entry and see how the Dow is moving. I'll give me a bit more hope. It's moving all the way. So, fortunate missed them. See, I'm still dwelling about the loss for some reason. I don't know why it's even reason. There's gonna be more trades, there's gonna be more setups. I don't know why I'm being so emotional about one missed trade when these markets are moving 24/7. That's psychology for you guys. How do you guys like the new risk disclosure that I had on in the beginning of this train? Put it up really quickly. Here, this one. I think it looks nice. Accumulating between this order block comes from encroachment, the volume imbalance. Again, not looking to do anything. It's probably going to stay in these kind of conditions until FOMC, but I want to stick around for a little bit more until it does do anything, and I want to catch it on stream. So I'll be on here for a couple of minutes. We are making a new high within that range. Breaking out of it seems like. Also look at the Dow moving in sync. Nasdaq. I want to see how this kind of closes here. So we're closing above the volume imbalance and this gap here. Price might want to reach into this buy side level here, this buy side level here, and maybe run all of this engineering buy side. And I want to note this order block price here. Take out the this one was it's a bit too steep. What about the bodies? How did the bodies look like? Bodies are just so steep. I don't know. Just trying to look like core of the body maybe. It's like price is gonna reach into the buy side. It might want to draw into this gap here. If it starts using it as a IO Fed and just quickly starts to push higher, possibly creating a order block, then that will be nice as well. Maybe if we just 3 year leaves a fair value gap, price wants to inverse that fair value gap. I could maybe take that towards the side, but I'm having some feelings of doubt or second guessing myself that maybe I'm considering this position in spite of missing that previous one as in FOMO and using it in that way to reflect my own fear and missing this move as well as the previous one that I missed. So it's that missed move that I had is for some reason having a big effect on me, which I don't want to have on me, but it is happening. So I wanna take a breather here and just look at what price is telling me and what position are we in. We've just filled the open range gap again, came back lower, used it as support, overlapping with this order block as well. We're failing to trade within this gap here. But yeah. Don't like how they're moving the poles right now. I would like to see them just be pushing together. Let's check on the S&P. S&P is moving pretty in sync, but what worries me is the Dow. I want to see it push with it or against it. So between that low and that low is S&T, but that's not enough for me to trust it to push higher. So I'm just gonna be watching. When you're watching, especially this volume imbalance here. Oh, God, I am exhausted. I logged in. I don't want the missed trade to be a dwelling point for me. I feel like I'm mentioning it too much already. But yeah, going back to this little block as well here, but the way it was formed is not the best, so I'll be looking. I just want to take out these two lows here, tap into this fair value gap. But it might as well just not do that. Just keep pushing to where it wants to push. This range. So we're inside of the fair value gap that I had. I did enter in a discount, and we're seeing kind of a retreat from it. We're also taking out this low here. I want to see how price wants to move off of that retracement today. If this becomes like a so you see that reaction that we had. I want to draw here, grab this. On this price is to come back here and sweep this low, which I would be entering after the soup. This would be a higher fed, and I want to know the order block is still being support price. So I think I want to buy right there, contract this high, stop loss like this, probably low right there. Just want to see how this plays out here. This would soup, solid. So what I'm thinking right now is, if we take this range high, I don't want to see it trade back into the fair value gap, and I'll go break even this high here. Yeah, so we filled that gap there, so it's not a higher bid anymore. And we're going back down for that third sweep, which I don't like. And what I'm feeling right now is a feeling of uncomfortableness, and I'm uncomfortable with my position, trading from from this level here, and then back up there, then I'm back down here. If price wants to trade back towards this level here, towards the volume imbalance, I don't want to see that be inverted. I don't want to see that. I don't want to see it hold. And if it does hold, then it's almost a guarantee that my price, that my position will be stopped out. And so pushing through it right now. but you can always come back down and leave that whole move as a wick there. So my feelings are under lots of pressure right now while waiting for this candle to close. This 30 seconds is honestly important to this position, and seems like price is pushing pretty balance higher. Okay, so there we go. And we'll break even right there. We just took that range high. Now I don't want to see it go back into that gap again. Price could come back down there and tap into this volume imbalance one more time as an inversion, as an efficient price range. But further than that, I do not want to see that happening. And now I'd like to see a market shift through this high and just push higher towards volume imbalance. If it goes back down one here, I would not be comfortable staying in that position, and I'm just gonna get out. I break even. I hope my stop loss is there. But yeah, I do not want to see price go back to the bottom, to that. Is it possible to play there? I'm allowing for negative $15. I don't wanna see it trade back into the gap. That's the place where it's a no zone. Can't reach back in there. There it's back on entry. Would have been solid to break even if my stop was still there. But I don't want to see it trade back into the gap. It's not that I want to see it. I don't want to see it trade back into my entry. It trade back into my entry, it's just not into the gap that I had drawn up. I mean, this gap here. So the position is way too choppy for me. Um, I'm not liking the reaction off of taking this high. I would have liked to see it just push through it immediately and head towards that high there. But you know, it's not what happens. Yeah, so let me keep on watching this position. I don't like the time it's spending within this range here. Again, after taking this high, I would like to see explosion towards this high here. I don't want to see it hang out there and meander around. I would like to see it just push through it completely. Okay, there we go. So that was that. A conundrum of emotions, but we result in a winning trade. And I don't want to say anything that would reinforce negative ideas, but I could have possibly held towards that high, but I did not want to weather myself in that position where we're accumulating this much and we're very close to the FOMC news release. I'm happy that I got out, where I got out, and I was about to say, honestly, I was about to say that I wanted to hold towards the top of the resistance, which, you know, it's bold of me to say, considering the amount of emotions that I went through weathering the journal, and I'm proud of myself for not messing with the position until something that was truly happening said that, okay, it's time to put on the position, or it's time to take off the position, or it's time to mitigate the position, or it's time to reverse the position. I'm glad that I stuck through with my initial thinking and trusted my gut. And let's end this stream off on a good note. Thank you everyone for watching. I appreciate you guys so much. And have a good Wednesday. I am toasted. I'm gonna go to bed now. Thank you all for watching. And I'll see you guys on the charts next time. Goodbye.